Good morning. I'm Noah Mercer, and you're tuned in to the FinMonkeys Morning Brief. Let's get a quick pulse on what's moving the markets today. First, real interest rates are keeping gold steady even as sovereign fund buying stays muted, a signal that safe haven demand is still anchored. Next, the latest CPI numbers and the Fed's upcoming decision are on everyone's radar, ready to swing equities and bonds. Finally, talk of a SpaceX IPO is bubbling up, and if it goes ahead, it could rewrite the playbook for high-growth listings. What's really framing the day is the tug-of-war between real yields and inflation data. On one hand, higher real rates are keeping gold in a narrow range, reminding us that safe haven assets still have a role when the Fed's next move is uncertain. On the other, the CPI release looms large, and any surprise could tip the equity market into a quick swing, while bonds react to the Fed's policy cues. Together, those dynamics create a market that funda. Turning to credit markets, home loan rates eased slightly, giving borrowers a short window of relief ahead of the central bank's decision, as noted in the rate snapshot. That dip may spur a modest uptick in mortgage applications, but the relief could be short-lived because mortgage rates track Treasury yields, which the Fed's policy will affect, directly impacting the housing market. Meanwhile, investors in India are preparing for swings as they await the Fed's policy clues and the country's who. And the headline grabber, analysts are weighing a potential SpaceX listing that could become the largest IPO, buoyed by AI-driven equity enthusiasm, according to market commentary. If launched, the offering could set a new benchmark for private company listings, and that matters because a successful SpaceX IPO would reshape capital markets and signal how AI-linked sentiment is pricing high-growth firms. That's the FinMonkeys Morning Brief for today. The next thing to watch is the CPI release, Fed minutes, and any official word on the SpaceX listing for. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.